Wow, sometimes the Chiefs are behind the Braves. Sometimes the soldiers lead the generals into battle. And that's what we're seeing right now. Hey everybody, Courtney Smith here with our Wall Street winners. This chart shows the S&P, but it also has a green line, which is the advanced decline line. And as you can see, the advanced decline line is leading the market higher. And in fact, just this week, we made new all-time highs on the advanced decline line. Well, what that means is that the small cap stocks, the medium cap stocks, in other words, not the big cap stocks, are leading this market higher. That's what the advanced decline line is showing us, and it's showing it to us very clearly. I find this to be very bullish. And the reason is because it means it's a broad market advance. So while the indexes have yet to surmount the June highs, the average stock has. And the average stock is more what the average person buys. So this shows that we're actually getting into a really nice bull market and that most people are able to capitalize on it. Yeah, this is Wall Street Winners, the place where you get the unique analysis you can't get anyplace else. And of course, you can get this on every newsletter, so this is not special at all. All right, let's take a look at the same kind of situation, only in the S&P 500. Here, the purple predictor, new all-time highs. And so to me, that shows, once again, we're seeing the smart money go into this market. They're buying, by looking at the advanced decline line, we know they're buying average stocks, not the big cap, mega cap type stocks at all. So this new move, this move that we started to make this week, we're going to go up and make new all-time highs on the S&P 500. Now the Dow, still more selling pressure. Look in the upper right-hand corner. The red line still above the green line. Now remember, I told you last couple of weeks, that we don't want to be in big multinationals because big multinationals are hurt by the trade war. But the average stock might even be helped a little bit. Okay, might even be helped a little bit. But the point is, they're not hurt. Whereas the big companies, so here you see Dow, it rallied hardly at all this week, whereas the S&P, and here I'll show you the NASDAQ here in a second, did extremely well. Once again, purple predictor went from slightly negative to slightly positive here in the NASDAQ, and the NASDAQ's going to make all-time highs probably this week, if not early next week. This bull move we're in right now is for real. Seasonality. Look at that. The IWM, which is 2,000 small cap stocks, gapped up and made new all-time highs. This is what, is it clear? Is this clear? I think it's really clear. We got to be in small, medium cap stocks and stay away from the big multinationals. Seasonality, market should dribble sideways, but clearly it's doing better than sideways. The yield curve. I got the yellow line showing you where we are now. Basically, it's a non-event. The yield curve does predict the stock market 1 year in advance, so this is basically a neutral for the stock market. But the red line shows you we're now down to the lows we made in late May. And that it's not bad yet, but boy, it's getting bad. It's getting me very nervous. It's getting the market nervous that 2019 is going to be a crappy year for the stock market. 2018, no problem. We're going to do really, really well here. But 2019 is starting more and more to shape up like it might be pretty bad. If I saw that number go from 85 down to below 50, I don't know if I'm going to be freaking out, but man, I'm going to be starting to be very defensive. So let's keep an eye out on the yield curve. It's becoming an important factor. Asset allocation, no big deal. After moving out of stocks and into bonds this week, they were about neutral. Same thing with risk. They're hunkering down. So we're seeing people go into the defensive sectors and into bonds because, yes, they want to be in the stock market, but they don't really want to be in aggressive stocks. Now, global shares, really boring, not interested at all, except for Australia. And here we can see Australia broke out. So in our fully paid up members, I'm going to be buying Australian shares on Monday. For fully paid up members, I'll give you the exact trading strategy on how we're going to make money in this. Bonds broke to new highs, it's the highest prices we've been in since January. I'm also now very bullish on bonds. Let's take a look at our indicators. We've been highlighting this now for several weeks. I'm ready to pull the trigger and buy bonds. Every indicator we have, the yellow line, the blue line, the chart itself, all pointing down, dragging the green line, which is 10-year treasuries, down as well. And by the way, this is one of the reasons why the stock market is up, is because interest rates are going down on the long end of the yield curve. The dollar, if interest rates go down, then the dollar probably will weaken. So we did weaken. We're getting down, this week we'll get down to the bottom of the range, down around 92.75. I don't think there's any reason to do any trade here unless we break the purple lines. A breakout of the purple lines, I'm all over it. Gold, this is stunning to me. Gold with a weak dollar and lower interest rates barely stabilizes. Wow, that's pretty bad. Now, our indicators are pretty neutral, okay? And yet gold was neutral this week, but wow, why is it so weak in the face of actually positive bullishness? All right, oil. As I mentioned last week, we've got all these rumors going around about increased production from the Saudis, and of course, and the Americans definitely are going to. There's not going to be any doubt about that at all. So this is I think we're going to probably see this market stagger lower. Bitcoin, as you know, we broke down to new lows. We stabilized down here at around the 6,000 level. Really, why bother? One of the problems we have is, as you can see, the purple predictor is in a bear market, a clear bear market, and that's going to drag Bitcoin down with it. And as I say, we should get down to 5,000 or 4,000 just from a pure fundamental point of view. So why is Bitcoin in such bad shape? Well, there's 4 reasons in my mind. There's been too many initial coin offerings, ICOs. The supply of cryptocurrency has boomed, is dramatically increased. And as a result, the supply, which is going to affect all of them, Ethereum or whatever it may be, but Bitcoin's the premier cryptocurrency still, the one that everybody knows, which is why we're tracking it. But there's just so many coins out there. There's no shortage of them. When Bitcoin started, there was a big shortage, and so as a result, it became a proxy for all other coins. But now there's 1 million coins. How can you keep up with them? There's like more coins than stocks almost. I'm exaggerating, but it feels that way. And really, a lot of them are just air. Well, give us $300 million and we'll figure out what to do with it later. Don't worry about it. We got you. So, and now what's happening is the ICOs, they're running to market quickly because the regulations are getting so onerous and being banned in some countries that they're rushing to market. So there's a big increase in ICOs, and that's a big problem. Too much supply. Also, too many scandals. Does a week go by where some coin isn't hacked into and stolen? I mean, really, come on. Transaction costs. Are you kidding me? The bid-ask spread is sometimes huge. Commissions, huge. And then the reality of Bitcoin and its acceptance is setting in. There was this romantic idea that it was going to replace the dollar. We were going to be able to all trade anonymously with each other. The government wouldn't get involved. That sounds great to me. I'm all in favor of all of those things. But the reality is governments will not give up their power to coin money. They will ban Bitcoin before they will allow it to be a significant competitor. So if Bitcoin ever became popular in the real world, not in the fake world, they will just ban it. It's that simple. So you can't go out and spend gold. Gold's a competitor to money, fiat government money, but you can't go out and spend it. They won't let you. You can't go in and buy something with a coin. They're going to say that's not legal tender. You can barter with it because it's a commodity, but what's Bitcoin? It's not a commodity. It's not anything. It's air. It's electrons. So the reality is setting in that I can't buy a loaf of bread. I can't pay my rent. I can't I can't do anything in my daily life with Bitcoin. So the reality is too much hype, too little reality. So we're going to have to wait again for new uses of Bitcoin before we start to see a big bull market again. All right, everybody, events coming up. Forex Wave Rider with Abe Kaufness coming up on August 11th and 13th in our Vegas office. October 26th, oh, they're out of order there. August 18th and 19th. This is a new announcement. We're going to have our Option Success School in Las Vegas. September 8th and 9th, our Stock Financial Freedom System in Las Vegas. And then October 26th to 27th, our Futures and Forex Masterclass in Dubai. Now, once again, go to stockbutler.com to figure out, you can just see how we put together our portfolios that are crushing the market right now. We're just doing so well. Go to stockbutler.com and subscribe. So you too, it's got tons and tons of amazing stuff. I rely on it every single week to come up with the great trades for the fully paid up members. All right, thank you, freebies. Love having you. Fully paid up members, hang on just 1 second.